will save our economy. We will rescue our middle class. We will reclaim our sovereignty and restore our borders. We will put America first, and we will take back our country, and together we will make America powerful again.
As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy.
Both U.S. presidential candidates making sweeping statements about the economic agenda. 2 months from now, one of them will be the next president-elect of the United States. And the markets are closely tracking each statement they make.
Well, from now, early September through the election, I won't be surprised if we continue to see volatility. We know that October is often a worrisome month, and this year just will add to that because we're going right into the final days of the election. This election continues to look like it's a very close election, and so that just adds to Wall Street uncertainty.
Volatility in the U.S. stock markets has already spiked. The VIX index, used as a barometer to measure the nervousness and the resulting volatility in the market, has shot up 48% in the past 3 months. The index is up 53% this year for the volatility in Wall Street.
In the end, it really doesn't matter to markets sometimes who the next president is. Right after the election, we tend to see investors quickly adjust to their expectations of the new leadership, and markets move on.
However, there are some who feel the return of Donald Trump as the U.S. president will augur better times for the stock markets. The Make America Great Again candidate has promised further cuts in corporate tax, with his Democrat counterpart promising her own major tax cuts for the middle class.
A reduction in the corporate tax rate from 21% to 15% solely for companies that make their product in America.
Well, instead of a Trump tax hike, we will pass a middle-class tax cut that will benefit more than 100 million Americans.
Both candidates have a laser focus on the tax agendas in their campaigns. This is because major tax cuts put in place in 2018 are set to expire at the end of 2025. And even though the president doesn't control the economy, he or she could influence changes to the U.S. tax policy.
Well, Trump could be better for the economy for really 2 reasons. First, tax policy. He's trying to cut corporate taxes, which is very positive for earnings and stocks. It's not going to increase the capital gains tax. And he's likely to deregulate a lot of industries, so like energy and banking. So at the margin, he would be positive for stocks.
Meanwhile, what the markets agree on is that a divided government is better for stock markets.
We remain very bullish about the market. We have a 6,000 target for year end. We do think the election is likely to end up in divided government, which is very bullish for stocks. And coming out of a Fed cycle, they're loosening. That's almost always a good time to buy stocks.
Wall Street, meanwhile, is prepared for more volatility till the election verdict on the 6th of November. Sights are also set on the U.S. Central Bank, which could surprise the street with a rate cut decision in its meeting next week. The U.S. Federal Reserve has held interest rates static since 25 basis point hike in July last year. Bureau Report, Business Today TV.
If you like the video, do like, comment, share and subscribe.